Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody's having a great week. Been kind of slow out there in front of the Fed announcement. Um, so that's coming up tomorrow. Welcome, everybody. Um, yeah, so let's get let's get right into the charts and everything. You guys should pull up your charts before we start. If you're watching this later as well. First thing, um, again, sign up for the newsletter. I have 5 days free for everybody. If I got some requests to show the charts. And I'm thinking about I will probably do that in the future, in the near future. But here's the thing: if I start giving out free levels to everybody, then my paying members are going to get really mad at me. So, but on the one hand, if you guys, you can spend literally 5 hours with me, 1 hour a day, or actually about an hour and a half a day, and I go through charts all day long, right? And give you levels and all that good stuff. So all you got to do is sign up. It's absolutely free. Um, again, click the link below. Just contact my support and say you want to get linked up for 5 free days, and there you go. So. Uh, we've actually had a bunch of people come and go in there, and we've had some really nice trades lately. So again, not to say that all trades are going to work, or that uh, everything's going to always be great, but if you guys are looking for some real trades, real money, all that good stuff, no nonsense, kind of commentary from me, then go ahead and link up. 5 days free. There you go. And I have another class coming up as well in the next probably a week from Friday, and it's probably going to be an options class. So I'll announce that in the next session. Okay, all right. So everybody, let's go ahead and get started. Again, we're kind of a slow start to the week this morning. Again, just if you're pulling up your charts. Nothing really changing really overall in the S&P. Let's start there as we come into the Fed meeting tomorrow. I think tomorrow could change everything. What happened this morning is, we had a nice rally going, as everybody knows, and then the JOLTS number. If you guys don't know what the JOLTS number, that's the jobs opening. Actually came in higher than expected. So we're still in that kind of situation where bad news or good news on the economy, in this sense, the jobs number is actually negative for stocks because of the Fed, right? The Fed is trying to squash inflation, trying to get wages down, and so forth. And so that is, if you get still high, elevated jobs number, that implies higher wages and so on and so forth. So you get the idea. And so that's what happened this morning. Excuse me. But here's the thing: if you look at your charts, and I just got off with my members. All we really did, if you look at your S&P chart, look at it on a 8 hour, daily even. What did we do? We just came right up to the resistance level. It's pretty clearly defined. That was back in August. You can see we peaked at 39.25, 39.30, 25.35, 39. We came up there again earlier this week, pulled back, came back there again this morning, and pulled back even further. So the algorithms are technically driven. I just had that discussion with my members. It's all algorithms driving this thing. And as soon as those JOLTS numbers came out, they came in and started selling really hard. So now the market did hang in there, didn't collapse and so that could be a signal. I don't know. Obviously tomorrow. Bottom line is tomorrow after the Fed, things can unravel here very quickly if they continue to be hawkish. If they basically, the premise is that, yes, they're going to raise 75 tomorrow, right? That's a given. Um, the question now becomes: are they going to go, another 50 in December or even more? But here's the thing: here's where the markets, and this is where the market's been kind of rallying, is are they actually going to raise another 50 or whatever in December, and then pause and look around and see, because a lot of this stuff still hasn't filtered through the economy. So I think that's really what the market is hoping for. That's what this rally's about. If again, if that is dashed tomorrow, in other words, if Powell says we're just going to keep on going indefinitely, inflation still rampant, we can't get it under control, then this market is going to unravel. I'll tell you that right now. So we are positioned for more volatility in the TLT here at TTS. We did close out our UNG position right yesterday at the highs. At We actually closed it at 2038, which is our closing price. So and then you saw nat gas fall right back down again. So I'll keep you posted on that. We do have some new trades that we're looking at in silver, in the grain markets. We had a huge gap in grains over the weekend, which set up some really nice trades in soybeans and soy meal. If you guys, again, I talk about this all the time. We'll get into the charts in a second on that. But all in all, again, we're really, on the NASDAQ, similarly, this has been the challenging market. It's, as you know, it's been underperforming. Even today, Amazon got hit again, and so on and so forth. It is still the underperformer. Still can't get even past this 11,700, 11,765. If you look at your charts, clear resistance, can't get even close to that. So we'll see. The last thing I'm going to talk about, and then we'll move on to from the equities, because again, you cannot, the leadership is changing. I think I talked a little bit about this on my newsletter this weekend. Energies, banks, insurance, there are all kinds of other sectors that are propping up this market, aside from the mega cap tech stocks. Those are the laggards. I'm going to do a session for my group next week, pertaining to all the various sectors that you need to look at aside from futures, clearly. And even the small cap Russell, as you notice, even the small cap Russell, which I've been talking about, actually was flat today. So there are other areas to look at on a kind of intermediate to term basis. On the future side, it's been rather challenging. If you didn't catch the momentum this morning, pretty much for the last 4 hours, it's just been kind of very narrowly trading. So you got to be pretty nimble to catch some of those moves. And so tomorrow, I think, is going to change the whole thing. Now, along with stocks, bonds, similarly, the 10-year, the 30-year, we've been talking about these levels. No different. They're kind of trading in sync. The 30-year came right up again to the resistance, 123 on the 30-year. And along with stocks, everything just fell back down again. So that's really what's going on. That JOLTS data, the 10-year also, 111.22.5. We've been talking about this level forever. Can't get past it. Still can't get past it. Whether, again, tomorrow we finally... Now, here's what's going to happen. Again, I've talked about this before. If, the economy, and by the way, here's the mixed bag, because on one hand, you got the PMI numbers, clearly the economy's slowing, but jobs are still strong. But we have to see a really kind of marked deterioration in the economy, and then yields will start rallying. Yields will start coming back up again. But that's still not happening. So it's still kind of that push-pull between, strong jobs number, all the big cap, mega cap, Amazons and all that. I told you that they're slowing down, but it's still. So this is why it gets a little bit foggy right now, and that's why I think the markets are still gyrating back and forth, because even institutions are having a tough time trying to figure this out. We did have a really strong rally in October in the Dow because it's only 30 stocks and it's well diversified. Just goes back to my point about if you're heavily in tech stocks, you're hurting. But if you're in energy, you're doing great. If you're in banks, you're doing great. If you bought insurance companies, you're doing great. If any defense related, by defense I mean aerospace, like Lockheed Martin, Martin Marietta. There's actually a bunch of ETFs that I'm going to go over with my members that encompass that. The insurance ETF is doing great. The United Healthcare and all that. Those are actually doing pretty darn good. In fact, ExxonMobil just made, some of these stocks are actually making new all-time highs. So there's a huge dispersion, huge disparity between tech and everything else, right? So if you have a 401k or you have a IRA and you're investing for long term, that's where you need to be at. That's what I've been focusing with a lot of my members on, the long term, aside from just the short term, day to day kind of futures trading. Okay. Any questions so far? By the way, can you hear me and see me? Okay, type in the chat just to make sure. Okay. Okay, so I think tomorrow really is going to be a pivotal day. Hey Ryan, how you doing? Jeff? Yeah, so yeah, tomorrow I think is going to be a really pivotal day. And it's going to be really fascinating to see how we do tomorrow. I am going to set up probably, Ryan, and I know you're not that versed in options yet, but I am going to set up a volatility play in the SPY probably first thing in the morning. I'll send it out to you guys. Okay, I'll be going through that with my members in the morning session. Okay, because I think that's really directional. Who knows, right? The market could keep going higher, could explode higher again on any kind of dovish type of tone from the Fed, or it's just going to fall apart again, and we're going to go right back down to possibly test the lows again. And so that's the beauty of the options, and that's the beauty of these volatility plays is it's market neutral. It's market neutral, and all we need is a big move, just like we had with our Dollar Tree position that we just closed out with a really nice profit. We just look for volatility. That's what we're in the TLT for as well. We got a TLT volatility play going right now. Okay. All right. So just on the 10-year, I'll give you some levels here. The 10-year basically 111,225 is resistance, and then there's a nice little level that I'm looking at possibly on a pullback to get long, roughly around the 110 on the 10-year. Okay, so just giving out something for you guys to look at. You guys can see that on a daily. You can see that on a 4-hour chart. Okay, on the 10-year. So that could come in after the Fed tomorrow if we get some volatility in, clearly we're going to have some volatility in stocks and bonds and the dollar. Okay, so those are the levels I'm looking at. Dollar basically just back and forth, and remember the correlation. If you're new to the channel and you're still kind of trying to figure out how bond stocks and the dollar are highly correlated right now, or inversely correlated for that matter. Notice today we had stocks down, bonds down, dollar up, right? And that's been really consistent for literally the entire year. We're already going to close out 22, which is pretty incredible, right? But if you think about it, that's been the kind of the corollary, and that's not changing. You saw that clearly today, as you actually saw a spike in the dollar going up as soon as stocks sold off, as soon as bonds sold off, the dollar spiked. Where are we at? We're basically ping-ponging between the distribution level at 111.88, 111.12, I'm sorry, 112 and a half on the Dixie, down to 109.89, 109 distribution. So we're basically just ping-ponging between those two in the last several weeks. And again, if we sell off in stocks and bonds tomorrow, we probably gonna retest that resistance level around 114 in the dollar, and that would drag down all the currencies and the metals and everything else related to that. Okay, that makes sense. In fact, I do have a level in silver that we're looking at going into the Fed meeting. So that could come in if we have a strong dollar after the Fed. So we'll watch for that. Okay. All right. So that's really what it is. And then on the currencies, they're the mirror image of the dollar. So all of the currencies, again, as the dollar was pulling back, we're coming off, we're rallying. But very choppy trading in all the currencies. So we've kind of been staying away from the currencies more or less. The only currency, the yen, interestingly, did bounce and then came right back down as the dollar. So any kind of advance in the currencies is going to get basically squashed or reversed as soon as the dollar starts rallying. And so that is what makes it challenging. Now you can say, well, why don't we just keep shorting currencies if the dollar keeps going higher? Well, the dollar is not going up in a straight line anymore. That therein lies the challenge. Yes, if you think about it, if the dollar was just raging higher, then that would be because then it would be trending higher and currency would be just falling off the cliff. But it's not doing that. It's basically just it spends a week chopping around sideways, then it drops, then it spends 3 days chopping around sideways, and then it spent literally most of October in a sideways action, right? From 112, you can see it on your charts, 114. Then it finally dropped off. Didn't get any follow through. Here's the thing: you would expect now it's going to go follow through. It didn't, and now it's going to come right back up again. So therein again, as you notice, therein lies the challenge with some of these with trading the currencies when you have that kind of price action. It's so. And that is, by the way, characteristic of the dollar index. Again, the assumption is that everything just kind of trends, goes up in a nice, lower left to upper right on the chart, or vice versa, right? From the upper left-hand corner down to the lower right-hand corner. Well, that doesn't always happen, and this is where a lot of that becomes a challenge for real trading versus the book learning that a lot of you guys have been exposed to. As you know, book learning versus real learning, real time, real markets, real money, whole different animal. Yeah, that's where you actually gain cut your teeth. Like anything else in life, you can read all kind of book about it. You can do this and that, but until you're actually getting in there, like I said, rolling up your sleeves and getting in the mud, all of it is it doesn't that's how you're going to get stronger and better at anything. So anyways, okay, so let's get moving here. So on the currencies, not a lot. I can skip through that. Similarly, because the dollar is also correlated to more or less to the dollar index, gold gold is did get a nice bounce and then just right back down again. So all in all, just very, very choppy. If you want to put some boundaries around gold, draw lines between 1679 to 1690. You can see there's a bunch of resistance, keeps banging up around those levels and then falling right back off again. And then all the way down to 1600 is where I'm going to be interested in looking to buy gold. So it's still, we may get there tomorrow. If the dollar really just takes off, that could push finally gold all the way back down again. Similarly, silver. Silver still looks better to me. You look at the chart. If you follow the 4-hour chart of silver, you can see that in fact, it on a chart basis, it looks much more bullish simply because all you have to do is look at every pullback all the way going back to October, I don't know, let's see, 11th, I think it was. That was when we made that, we made the August low. We had that huge rally in silver. You can see it on the charts all the way from, we rallied from 18 all the way up to 21 and round tripped it all the way back on what day was that? Yep, the 14th of October. And if you just look at this chart pattern, you can see that every pullback, it rallied, pulled back, rallied, pulled back, rallied, pulled back. Every pullback has been higher, or every low, I should say, has been higher than the prior low, the prior pivot. So again, that tends to be a bullish pattern, and so therefore, I'm also looking to get gold. Get long in silver. At some of these pullback areas. Okay, does that make sense, everybody? Can you guys see that on your charts, by the way? Right? You can see that kind of sequence of that I'm looking at. Okay, but clearly, by the way, this is still tied to the dollar index. So you saw even today, even though it looks pretty bullish, even today, you can see as the dollar rallied, it did, silver did pull back. I talked about a little bit about copper. Copper looks like it's putting in a very nice range, which we could trade. I haven't talked much about this, but when you have a very fairly defined range, okay, when you have a fairly defined range, you can trade a fairly defined range, correct? And so if you look at your chart, it's 331, 357 is really what your range is on copper. And so if you can define those ranges and there's enough leeway in there, you could actually trade copper. Now there's a micro copper level, right? So there's a micro copper level that you can trade. I don't know if you guys know this. It's the standard copper level, 250,000 pounds, is probably too much risk for everybody, but you can trade that micro MHG contract and that kind of thing. So that's something for you guys to look at. Oil, I think it was Fernando that was in here last time. Yep. Hey, Hazel, how you doing? Are you an OTA student? I haven't seen you, or are you just coming into the channel first time? Yeah. Oh, okay, good. I hope you're enjoying the content. Again, I think Fernando was in here last time, and $90, I think, was the level I mentioned. And sure enough, you notice on the charts keep banging up. Oh, good. Keep banging up against the $90. You should have your charts up, Hazel, when you come in here. I'm basically just walking you through some charts. I don't know if you're a futures trader or options, or I don't know exactly what it is, and if you want to join me I run a website. So, okay. Yep. All right. Well, welcome. Oh, okay. So $90. We got by the way, I don't know if you guys know this, we got an OPEC meeting tomorrow, right? So we do have an OPEC meeting tomorrow. That and we also have inventory numbers for you are a little is that correct? A little out of focus. The Philippines. Okay. All right, good. Is everybody else out of focus, or is that just this person, this 517M Rob? My camera seems to be projecting fine. I don't know. Yeah, might be might be particular to you, 517M Rob. Yep. I need a haircut. That's just right. uh, anyways, I'm like, all right. Besides the point, right? Oh boy. Okay. Yeah. So on your CL chart, look around, look up at the 90 and a half, 91.44, right? That is correct, Jim. Oh, you're back from your vacation. Yep, we do have the I talked about this earlier. Right? You came in late apparently, right? Yeah, that's going to be the big one. Yep, that will be the biggie tomorrow, and that will probably either get this rally going, really supercharge this rally, or crush it. Yep, one or the other, depending on what they say. Odds are that they're probably still going to stay hawkish, so it's going to be interesting. Now, here's the thing: what if they stay hawkish and the market doesn't get crushed? What does that tell you, right? Does that make sense? Like we've been talking about how the market's been pretty resilient, so that's also another kind of scenario. Okay. All right. So on oil, watch that 90 and a half, 91 and a half level. You can see that on your charts as well if you pull up your daily chart. But oil has been very, very challenging. Now let's finish up with, I only got about 3 minutes. Nat gas all over the place. We did really well with our UNG. We got in right on the lows, got out right at the highs, and now it looks like we may be in the midst of putting in a big range in nat gas between, let's call it 5.5 and 6.5. You look at your charts on nat gas, right? So we'll see. It'd be interesting to see if we are starting a new kind of range trading, which if you go back August, September, you'll see we actually spent all that month just kind of range trading as well. So we could be in the midst of that coming into that nat gas. And I will be looking to get back into UNG. I'm using UNG just simply because the futures obviously are very expensive and extremely volatile right now. But we are going to look at the quarter size futures as well coming up. We just haven't had any great levels to trade against. So other than the weeklies, yep. And then lastly, the grain markets. I'm just going to finish up with that. Look at wheat, had a massive gap this weekend, and looks like wheat is going higher above 9. I am focused on the grain markets. If we can really get some traction above $9 a bushel on wheat, we probably have a straight shot up to about 9.5. Okay. And also soybeans. There was a nice gap in soybeans from this weekend. We are trying to get long soy meal. There was the gap filled on soybeans. If you look at December soybeans, okay. So that would be interesting to see. Grains are really starting to move. Remember, I made that mention of that the other day. So start looking at your grain markets. They are extremely volatile. So use the 1,000 bushel contract. Okay. Make sure you use the 1,000 bushel contract when you're trading those, if you can afford, because like even wheat. I mean, that thing's rallied almost 80 points, almost, and that, remember, at $50 a point, that's pretty expensive. So, okay. All right, everybody, I'm going to get out of here. My half hour is up. Again, Fed meeting tomorrow. If you want to look at some charts, sign up for the 5 free days. And be careful tomorrow. There's going to be tons of volatility. And if you, that is correct. SMZ22, correct, Ryan. Yep. That's the soy meal. That's $10 a tick. Okay. All right, everybody. Have a great rest of your week. Be careful trading tomorrow. And then we have non-farm payrolls on Friday too, by the way. I must mention that. So I'll see you guys on Friday afternoon. I do these again on Tuesdays and Fridays every day, every week, I should say, right after the market closes for half an hour, kind of go through some levels and so forth. So I'll see you guys after the close on Friday. And then by then we'll have the Fed out of the way and we'll have non-farm payroll. So it'll be interesting where we're at by then. And okay, so have a great week, everybody. And I'll talk to you soon. Take care.